Imagine having a trading strategy with a 98% win rate and 20% monthly returns. Only if, right? Well, you're in luck, because not only did I find a strategy with those numbers, but it's something that's not even allowed on the stock market. If you're tired of losing your shirt every time you try trading Bitcoin with leverage, then stay tuned, because this video is for you. In this video, I'm gonna show you how I've made over $100,000 using a strategy that, well, feels illegal.
FBI, open up!
Now I know what you may be thinking. Yeah, okay, this seems way too good to be true. And you're right, that's exactly what I thought when I first began doing this back in November. And it's still the exact thought that goes through my head every single day, even after I've already cleared over $100,000 in profits. But by the end of this video, you'll see exactly how it is that I'm doing this, how you can also do this, and why this feels illegal. I'm basically printing money like if I was Jerome Powell. Of course, a more younger, handsome version of him. I've spent the last 6 months analyzing trading data and perfecting this strategy. This is a game-changing cheat code that Wall Street has been using for years, although a slightly worse version of it. But it's literally unknown in the crypto world. So here's the thing. Traditional crypto trading methods like leverage trading and buying options sound good in theory, but in practice, they often fail to deliver the consistent profits that you're looking for. So let's break it down. Let's start with spot trading, since it's the easiest and probably the safest way to trade. I say the safest because, let's say for example, you buy Bitcoin at $73,000. Even if Bitcoin drops down to $55,000, $56,000 like it did recently, you can really just wait it out and you don't have to realize those losses. Even though sometimes that may take days, weeks, or even months. Now the downside to spot trading is that your profits are going to be limited to the capital that you have. Since the majority of new crypto traders have small capital with big dreams, this leads them to eventually introducing leverage for higher gains. Now, leverage trading is a high risk, high reward type of trading. Now, first of all, you get charged fees not just for entering and exiting trades, but also just for holding trades open. Getting hit with fees every 8 hours adds up very quickly. This is without a doubt probably the most difficult path to becoming a profitable trader, because it's so unforgiving. So in that same example where you might have bought Bitcoin up here around $73,000, with this initial drop of 17% alone, you would have probably had your trade liquidated and closed at a loss. A rule of thumb is that if you can't trade profitably in spot trading, then you can't do it with leverage. In 2023, I hit a win rate of 67% through 107 trades for a return of 154%. Now, I mostly swing trade, and I've been doing this for over 10 years. Even then, I still only hit on 67% of my trades. The issue with this type of trading is that you either have to be right or you're gonna lose. Okay, so what about buying options? Buying option calls and puts have gotten popular on crypto exchanges. But the issue with options is that there's more variables. And if there's more variables, then there's more ways to lose. With options, you don't just need to get the direction right, but you need to nail the timing as well. Just imagine going to the casino and playing red and black on the roulette table. It feels like you have a 50% probability to win, except you're not taking into account the little variable that casinos put in to give themselves an edge over you. The 0 and double 0. That small little variable drops your win probability from 50 to 47.4%, which is just enough to ensure you will always lose long term. So options are pretty similar to this. If you're starting out with having to pick the correct direction of Bitcoin, which gives you around a 50% probability, then once you introduce a second variable, time in this scenario, your starting probability to win will dip below a 50% chance of winning the trade. But most people don't understand this. So if those ways of trading are so difficult to profit in, then why do people still do it? They're sold on the dream and lifestyle of unlimited profits in a winning trade. So what are the alternatives? Ah, yes, what you've all been waiting for. So to start off, the strategy that I'm gonna show you today does not have unlimited profits. This alone turns most of the people away. Yet there is a way to scale it up, which is what most people miss. Next, you have to take into account the win rate. Like I showed you earlier, year to date I have a 97.7% win rate after 87 trades. Believe it or not, we went on a 66 trade win streak to start off the year, and we're currently on a 13 trade win streak as of this recording. So how does this strategy have a 98% win rate? It seems unreal, right? What if I told you that there's a way to profit from Bitcoin without having to predict which way it's gonna go? I promise you will fully grasp this by the end of the video, but the overall idea is that we only need to be in the ballpark in order to profit. That means that it doesn't matter which way Bitcoin goes after we open the trade, as long as it doesn't go past our specific price, we will make money. And remember that little time variable that you have to go against when you're buying options? Well, with this strategy, time is actually on our side. No, seriously, time literally pays us. So to recap, you don't need to be right on which way Bitcoin is going next. The time variable actually helps us, and fees are way cheaper compared to any other type of trading. I think it becomes clear and obvious that if you want the easiest path to become a profitable trader, then there's only one thing that you should be doing: selling options. So this strategy has been used in traditional finance for decades, but it's still a hidden gem in the crypto world, and I've been taking full advantage of it. Last month alone, I made $67,000, which was a 41% overall return on my capital. So let's talk about how selling options work. When you sell a Bitcoin option, you're essentially selling the right to buy or sell Bitcoin at a specific price, known as the strike price, by a certain expiration date. The buyer of the option pays you a premium upfront for this right. And I know that might sound a little confusing in the beginning, but stick with me. The current price of Bitcoin is $70,000. Let's say you decide to sell a put option at the strike price of $65,000 by the end of the month. The buyer pays you a premium of about $140 for this option. Now here's where the magic happens. If the price of Bitcoin stays above $65,000 by the end of this month, you get to keep the full premium of $140. That's right, traders are willing to pay you to make a bet that Bitcoin's price is gonna fall beyond $65,000 within the next 4 days. I mean, it could happen, but is it gonna happen? Odds say probably not. So it doesn't matter what Bitcoin does here for the next few days. It could go up as high as it wants, or it could drop. As long as it doesn't go beyond $65,000, we get paid. Now on the flip side of that, if Bitcoin's price does fall beyond $65,000, you basically lose the difference between your strike price and the price that Bitcoin drops down to. So let's say Bitcoin were to drop down to about $64,000, you would be down $1,000. However, you still get to collect that premium. So if the premium was $145, you'd really only be down $855 in that instance. So this is a part that scares people away from this strategy. Yes, you have a limited upside and an unlimited downside. However, I will show you guys that there are ways to manage the risk. So make sure to stay tuned for that. Also, as you can see from my 87 trades this year, that type of scenario has only happened to me twice. Because again, we don't have to predict the exact direction, only the range it's gonna stay within. So it's a lot like being the house in a casino because we're able to stack the odds in our favor. So how do we actually make money doing this consistently? The key is to sell options with strike prices that are far enough out of the money that they're unlikely to be reached. But don't worry, we'll dive into the specifics of how I choose my strike prices and expiration dates later on in the video. For now, just understand that by selling options, you're essentially getting paid to stack the odds in your favor. It's a way to generate income from your Bitcoin that you already hold without having to sell it. And the best part is, you can do this over and over and over again, selling new ones as the old ones expire. All right, so now that you understand the concept of selling options and why it blows everything else out of the water, let's break down the exact step-by-step process I use to consistently achieve a 98% win rate and 20% monthly returns. So when I first started out, it wasn't what you see now. In November of 2023 is when I first began testing this strategy out in crypto. And my first month started pretty well, making over $5,000, which was about a 6.5% return on my capital. I was ecstatic. However, that did quickly change in December as I had some setbacks, pretty much losing all my gains from November. I thought to myself, I knew this was too good to be true. But here's how I turned it around and turned those losses into lessons. The first lesson is an obvious one that seems so simple that we tend to forget all the time. The trend is your friend. When selling options, remember, we're picking a top or a bottom. Since we are in a bull market, picking a top is not a good idea. You can see I had some massive losses trying to pick a top here. Once I decided to only open up positions going with the trend, I began to win a whole lot more. The next lesson is pay attention to the delta. The delta basically tells you your odds of winning a trade. In traditional finance, you're usually pretty safe around 30. In crypto, you need to be more around 20 or below because it's so much more volatile. The third lesson I learned was to stack the odds in your favor by putting your strike prices below multiple support levels. The more support levels between the price and your strike price, the better your odds. So let's go ahead and look at a real world example of how we put it all together. First, identify several key support levels on the Bitcoin chart. These are price levels where Bitcoin has bounced before. The more times it has respected that level, the stronger the support. Bitcoin's currently sitting at $70,000, and I've identified some strong support here at $66,800, down here at about $65,500, and right here, right around $64,000. Now I open up the options page on Bybit, click on BTC options, and I am usually looking for expiration dates that are at least a week away. So the 7th of June is about 10 days away. Next, I'm gonna be looking at the delta. So somewhere around 20 or below, that gives us kind of these options right here, basically starting around $66,000. Remember, we had support levels at 66,800, 65,500, and 64,000. And the last thing is really more of a preference, not exactly a rule, but I like to get at least a 10% return on my collateral for each contract. This is pretty simple to figure out. Collateral for one contract is about 10% of the price of Bitcoin. So if we go over to the 66,000 strike price, make sure to switch it over to sell. The order price, if you want it to fill right away, has to pretty much be right here where this green price is. Put in one contract. You can see that the margin required is gonna be 10%, about $7,000. And looking here at the profit and loss probability, you can see this contract would pay about $730. Remember, the value of the contract is gonna be your order price here. That is the premium that you will be getting paid. So as long as Bitcoin stays above $66,000, by the time this contract expires in 10 days, you make this money, right? So 730 is about 10% of what you had to risk, which is 7,000. So you just set the trade and that's it. It's literally that simple. Of course, if you have smaller capital, you want to be using less money. So instead of 1, you could be doing 0.1. Now you don't need $7,000. Now you could do this same thing with only $700. You have less than that, that's fine. 0.01. Now you only need $70. So make sure to manage your position sizing correctly. My rule of thumb is to always keep your collateral per trade under 10% of your entire capital. The beauty of this is that unlike in traditional finance where you need to be able to cover at least 100 shares if you're looking to sell an option, here you can start with any amount of capital. Remember, we're not looking to hit any home runs here. Singles and doubles add up very quickly, especially when you're hitting at a 98% win rate. The only times I've run into issues with this strategy is when the entire market just has a meltdown. So for example, at the beginning of this month, Bitcoin had a crazy pullback. You can see that we took a pretty big loss here of $7,000. But in these scenarios, I can still grab that collateral, roll those positions back to later dates, later prices, and recover that loss. Like I did with these two positions here. You can see back in March, I had a almost $13,000 loss. I took that capital, I rolled it back into a position that was 1 month away and recovered my losses plus made a profit on it. I did the same thing on this position, although I lost $7,000 in that position. I grabbed the remaining collateral, rolled it back 29 days later to a different price, and ended up once again not only covering the loss, but making a little profit on top of it. I just had to wait 29 days more. Now, the final part of this strategy that is just a straight up cheat code and makes all of this feel illegal. When you sell puts in traditional finance, you need to have that collateral in cash. However, in crypto, we could leave them in crypto. Now you might ask, why does this matter? If we're selling puts, we're essentially betting that the price of the asset is gonna go up. As long as that happens, we collect our premiums, we're happy. However, if your collateral is in cash, as the asset goes up, you miss out on any asset appreciation, which of course limits that upside of the asset going up, right? However, in crypto, we can have our collateral in any crypto. So not only are we making money from the premiums that we're collecting as we sell those options, but we also make money as the asset appreciates in value. So we're basically growing our account in two different ways at the same time. Then the final cheat code that I do to really take things a step further is reinvesting my profits back into crypto and compounding them. So for example, any of these profits here that I made back in January, when Bitcoin was trading at $40,000, has now appreciated by 68%. Meaning that if I collected $1,000 in premium back in January, when Bitcoin was at $40,000, reinvested it back into Bitcoin, that would now be worth $1,680. And that's just one contract. I've been doing that with all 87 contracts that I have closed. So although I began with $78,000 and I've made $153,000 in profits, my account is actually up over $310,000. That's a difference of over $90,000. So by being able to hold my collateral in crypto plus reinvest my profits into crypto, I've made an extra $90,000 on top of the $153,000. So that means in 5 months, I'm up over 297% in profit. Let's say I stay at 297 profit throughout next month as well, just to keep things simple. If this were to happen again from July through December, my account would be at $1.2 million. And if it happened again the first 6 months next year, I'd be sitting at $4.88 million. And just for fun, let's say once again, the back half of 2025, we had the same exact results. That would put me at 19.4 million. So that means that in 2 years time, my account would have gone from $78,000 to 19.4 million. That's about a 25,000% return. Now, of course, with those numbers, we're projecting what crypto may do within the next 12 to 18 months, right? So of course, it throws those numbers just out of this world. So let's pretend that crypto stays exactly the same and doesn't go up or down. So no appreciation, right? But we keep more or less averaging monthly what we've been doing. Now you can see here, I'm averaging over 24.5% per month. To keep things simple and conservative, let's just call it 20%. You can see I've created this sheet here and I'm just adding on 20% per month to see what type of projections we get. Spoiler alert, these results are still insane. By the end of the year, the start of next year, I should hit $1 million. Halfway through next year, I'd be sitting somewhere between 2.7 to 3.3 million dollars. And by the end of 2025, I'd be at around 8.2 to 9.8 million. So this shows us that even if we don't reinvest our profits back into crypto and we have no value appreciation during that time, which by the way, history tells us that they will appreciate in the next 12 to 18 months. I did an entire video on this that you can check out. We would still grow our account to around 8.2 million by the end of 2025. Might not be 25,000%, but it's still a gain of over 10,000%. That is over a 100x return in a 2-year span. Now, while that's fun to look at, remember guys, past performance doesn't guarantee future results. And we are still in crypto, which is very volatile and unpredictable. If you're uncertain about doing this on your own, I have a Discord group where I share every single trade that I take. And members are doing the exact same numbers as me, even with lower amounts of capital. I will link it below in the description. Now, if you want to be able to make these consistent 20% monthly returns, you won't be able to do it without watching this complete in-depth guide first, where I walk you step by step through the entire process of not only doing it, but exactly where you can do this. Because not all exchanges have this available. So click on the video on the screen right now.